Good weekend, all. Ira Epstein of Linn and Associates with your weekend edition of your financial markets for this Saturday, October 16th, 2021. Excuse me, got a cough. Could be the allergies at this time of the year. And by the way, it's gorgeous in Chicago. I love when the fall hits. We woke up in the 40s. We won't get over into the 60s in the downtown area. It's brisk. It's beautiful. There's no snow. There's no rain. It's a beautiful sunny day. I love it. Okay, so in the metals, we've had a rally that all of a sudden fell apart on Friday. Gold down $30, silver down $12, not copper. If you're a full subscriber of mine, I started writing last week, early in the week, that I think there's a squeeze play in copper. Some of my traders said, well, Ira, how do you see that? I went to the London Metal Exchange, LME, and look at their statistics. Then I looked at New York, the COMEX, and I'm going, okay, where's their deliverable stocks? And I came up with the idea, brilliant that I am, that those stocks are disappearing. Somebody's removing them quickly. It's not as though there's not copper out there, but deliverable grade copper, and you remove it, and if you have to get it to deliver on a contract you've hedged, and there's not enough there, old squeeze play. The reason I know that, I've been at this since 1969. I've been involved in them, seen them. As fast as they happen, that's how fast they fall apart. But understand what's at work. Then understand that we're still at a point in time in life of coming out of this COVID where materials are on fire. Energy is a huge event right now. You do understand in zinc, they've started to shut down certain smelting plants abroad. That's very important. And it's because of energy use. I am one of these guys telling the United States government, you're hearing it loud and clear here, stop allowing U.S. Bitcoin and other crypto mining in the United States. We need our energy cost to stay down. Let those miners mine elsewhere. Let somebody else carry the burden. We've become the biggest country for the miners. China threw them out. The United States should wrap this around their head and throw this out. It does nothing for our society. It's for a select group of people. That's not how that energy should be used, and these things consume a heck of a lot of energy. So I'm anti the mining for that reason, not anti-Bitcoin or the other cryptos. Whoa, we're starting to get a bounce that's a little stronger than I thought would happen. Still lower on the interest rate. So we'll start off with a monthly chart. But before I go into it, a couple of things. If you like what I do here, please thumbs up. It costs you nothing on YouTube. Second, I want so many of you to understand Bollinger Bands. I know you think you know them. I doubt you do. You think when they hit them, that could just be a resistance point. It's more than that. And I teach you how to use them with what I consider to be, me, the Ira Epstein University, I'm being facetious when I say that, a master's degree in it. So it's beyond what you think you know. I talk about this at the end of this. Help yourself. It's inexpensive as can be. It's going to carry you in your thinking as a trader, maybe indefinitely. Take a look at it. You may hate it. I get it. You may fall in love with what I did. I get that too. Okay. Gold is fighting a battle at the 18-month moving average of closes. And the trend has been down, not up. You got the legacy of lower highs, lower lows. So when a market makes a rally back like it did here, you haven't even hit last month's highs. As nice as it is, everything has to be put in context. And the context of gold is most certainly inflation. I think we're getting into the camp that more of us are believing. I certainly have left the Fed camp where a lot of this is transitory. I understand some numbers might be. I'm with them on that. But I'm seeing more things now that I don't think are. I don't think labor cost is going to be transitory. I think it's sticky. And I'm looking here. Now, is there anything on this monthly chart, because we're only halfway through the month, that can turn it bullish? No. Even if the market came back and settled for the month over, 1821.80, even over that high. Well, the way it's set up, I'd still end up with lower highs and lower lows. You got to get over that high to break this pattern. That's the interesting thing. So on a weekly chart of closes only, have you even gotten back to the point where you're at 1783.40? No, that's still the resistance point. You've seen it here. So as a chartist, in order to understand gold, you've got to throw the name of gold off your chart. Think about what I just said. Otherwise, you're caught with the emotion of what you're reading in the paper. You're caught with the emotion of what you think, not what you see. Very big difference. When I look at the weekly bar chart, that doesn't look overly bullish to me. I see the market's got a higher high, higher low. That is bullish. I see the market held supports at the 100-week moving average, and it's fighting as it comes back at the 18-week. I see that too. Did the market close over the 18-week average? No. So I have the trend up, the bias down. That is not, on a longer-term basis, a buy signal. Where's the major support? Well, it keeps proving itself at the lower Bollinger Band. What about momentum? It keeps proving. That's where I want you to take that and get your master's degree, that is the support level. So we're caught between the lower Bollinger Band and the 18-week average of trade, and gold has not, on a weekly basis, joined the camp of the inflation argument yet. Simple thesis. Gold-silver ratio. Slipping back. Silver has a ways to go to get neutral against it back at the 73.42 area. Hasn't done it yet. Has silver on the weekly charts turned up? No. Did the market ever embed? So let's take a look here. Embedding means both the numbers that make up the slow stochastic get under 20. Week 1. Whoa. Week 2. Week 3. Yeah. That means the market, until the red line closes back over 20, is in the bear camp. Guess what? It's no longer in the bear camp. And that means silver might be willing now to make a run to the 24.35 area. Silver should get stronger than gold basis these two charts. That's what it's telling me. In the copper market, what are the odds of copper staying over the upper Bollinger Band very long? It ain't there. So this is the first big week it's up. For the week you're up 10%. I think the pros are taking money off the table. I'm the one that's telling you and wrote about a squeeze play. And I'm telling you the pros are taking money off the table. So I obviously don't know what I'm talking about. No, that's not what I'm saying. I generally don't know what I'm talking about. That I'll agree with. The market over that number, it can be there a couple of weeks, not much more than that. 95% of the time it'll pull back into the band. Now that works two ways. The band gets pulled up when this occurs. So when we reopen on Sunday night, the math of the algorithm is going to kick that up right away. But then at a higher number, you can start rolling to the right-hand side. That's all it means. In the platinum, you're no longer in the bear camp, but you haven't been in a long time. Guess what? This market, I'm going to take you to a key number here, right here. This high was 1028, oversold, hitting for the first time the Bollinger Band 100-day average. Market playing its game there. Remember, the high here was 1028. Market comes up this week, 1026.50. That doesn't take it out. Slips back, so you have lower highs, lower low. Market oversold, but trying to embed. This is September 10th. September 10th. Now watch. Hits the lower Bollinger Band 200-day average. I would be screaming. This is where the pros are covering shorts. Market turns back up. This now takes out right through here, 1026.80. That's last week, the week of ending October 8th rather. That's where you should have your resistance, and you're following through a little bit. That's all. So lower low, higher high, market cleared one resistance panel. Wouldn't be surprised to see it fall back there. It's not a buy or a sell. It's no longer in a downtrend. Dollar index, where do you think I think resistance is? If you were here rallying to this market, upper band, 100-week average, 200-week average. Overbought. I think the pros are coming out. Still do. Do I think it's much downside? No. Is the market embedding? No. So it either, over the next 3 weeks, embeds or it corrects a bit to get back down to another number that it can live with. Interesting chart. So I said, want to get that degree and learn how to use those Bollinger Bands, where they come in, how to work with them? This is how you do it.